Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Pretty interesting time in the US again. It looks like President Trump has sort of blinked again and has now paused the trade war with China temporarily. Now that came against the backdrop of really falling approval ratings and really heightened talk about a recession in the US, and even potentially some sort of toy makers talking about potentially sort of Christmas almost being cancelled in the US because there just wouldn't be enough toys to go around because of the tariffs. So what Trump has announced is that there will be a sort of 90-day pause with the Chinese tariffs. Then we go down to 10% with the additional 20% for the sort of fentanyl tariff. And likewise, China has gone the sort of same way, and they've reduced the tariffs on US goods down to 10%. Now, what is really quite interesting, obviously, is that Trump never admits he's wrong, and is this sort of a way of him sort of being able to back out of it but still trying to save face? Because it was quite interesting, and when he was asked about the ships coming in, sort of a dramatic fall off into the US ports, they said, well, that's good because we're not losing any money. But then the flip side of that was that the dock workers were being sort of laid off or shortened weeks. Truck drivers were having the same issues as well. And he was starting to see a little bit of sort of pushback as well in Congress with some of the Republican senators and House of Representatives starting to question what was really going on. And with Trump trying to get his one big beautiful bill, which includes all the tax sort of cut extensions through the House and the Senate, that could have posed a few problems. But on the back of this sort of thawing with the trade war, you've seen US rates sort of rise quite a bit. The 10-year is back above 450, and the 2 years back above 4% at 402. Because certainly even with a 10% tariff on Chinese goods, if that is the sort of end case scenario, that still is inflationary for the US economy. But also as well, the tax cuts will increase the deficit, and that's obviously funding, which is going to result in sort of higher rates. So certainly interesting times in the US. It could be a very interesting next sort of 3 months. Because we've still got no end to the Ukraine-Russia war. Although Putin did say he was prepared to sit down and discuss the situation with Zelensky. Zelensky said he would be there for the meeting, but as yet, Russia is still continuing with drone attacks on a daily basis. So despite the talk, you have to question whether Russia really does want a ceasefire. Again, on the back of the thawing of the sort of trade war between China and the US, you see an oil spike above $60 now at $64 and change. Now in the UK, they were the first one to have a trade deal announced with the US, but actually if you look at the sort of finer details, really there's very little sort of fresh news in there, and you could even argue that certainly from the US perspective, it might even be slightly worse than was originally in place. But with the Bank of England cutting rates down to 425 from 450 and signaling that further rate cuts are in the pipeline, potentially the UK economy does have a little bit of sort of upside and potentially some light at the end of the tunnel. Now in the EU, as yet there's no sort of trade deal on the table, and it's just a question of waiting and see what happens. But given the fact that Trump has backed down on the Chinese sort of tariffs, potentially there could be a similar sort of situation for the EU region as well. Now in Australia, looking for the next RBA meeting on the May the 20th, potentially looking at a rate cut. We just a quarter point, but again, that will sort of benefit the Australian economy. Now, similarly here in New Zealand, with the Reserve Bank meeting in May, looking at a further rate cut there of 25 basis points, taking the OCR down to 325, and then a further cut in either June or July, taking the OCR down to 3%. Indeed, some analysts are even saying that the OCR could go down as low as 2.75 or 2.5. Now, while that's obviously good news for mortgage holders because rates will be falling, for savers, obviously, it has the reverse effect with interest rates falling on their term deposits. But with mortgage rates falling, that potentially should see the housing market sort of pick up. Again, that's all sort of good for consumer confidence. And again, the New Zealand economy is sort of pushing on at an okay rate. And with further rate cuts coming, you'd expect to see a little bit of further sort of growth over the next sort of 6 to 9 months. We're certainly the dairy sector is doing pretty good. Horticultural is doing pretty well as well. Now the budget on May the 22nd is likely to be pretty sort of tight. There's not going to be much of a giveaway out there. And it's just a question of the government trying to steer the economy back onto the straight and narrow. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.